Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, September 24th, 2020. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Your likes is what keeps this channel going. So today we will talk about stocks, which are again approaching all-time record highs after kind of stopping at a logical level. News of EverGrande, the developer in the Chinese real estate developer. We'll look at that and see if the technical picture showed anything different using my indicator lines. Bond yields could spike higher, and by extension treasury bonds could go lower. This could help slow down the real estate, but I don't think it will have a lot of impact on stocks. The dollar is moving higher, and this is weighing on gold miners. And I think Bitcoin is again at this very dangerous situation where it can easily collapse by 50%. Now, if you're a subscriber, then stay tuned for a separate two videos. One is for elite newsletter, one is for speculator newsletter. So in the elite newsletter we cover all kinds of ETFs, forex, commodities, as well as large cap stocks, and in the speculator newsletter we cover all kinds of new breakouts, new stocks that are breaking out. So stay tuned for those. They are paid newsletters. To sign up, go to MasterChartsTrading.com. You can sign up for the trading indicators, and the newsletters that I just mentioned, and the ultimate bundle, which will soon include additional products. We're currently working on a market breadth indicator based on my lines, based on my indicator lines. So stay tuned for that and do sign up if you're ready. All right, so looking at stocks, S&P 500, not much again has changed. We're looking at longer term picture. If you look at longer term picture, S&P 500 broke out back in May of 2020. And since then, really, there was no good opportunity to get in. Good opportunity, in my opinion, to get in would be around the blue line. You can see on this chart. And again, I'm using my indicators, and you can see them on this chart as the green, blue, red, and yellow support resistance lines. So these lines show pretty much everything I need to know about what to do with stocks. So notice that right there where I'm hovering on 20th of September, we actually hit the green line, and this was for the first time since November of last year. So green line in this system, in my system, just means weak support. Weak support is meant to be broken. Now, as of right now, even this weak support is still holding. Notice that we touched this weak support right there on 20th of September, but closed above it. We haven't even closed below it yet, you see. So it is very possible that we'll simply make a new all-time record highs, from which we're really close. If that happens, we could easily continue higher. We're currently at 40, the last record was at what, 4,500 or so. I don't see why we cannot go to 5,000 before a sizable pullback. And when I say sizable, I just mean towards the blue line, and blue line is like 10% away. So from today's levels, you can see we're like 8% away. That's not a huge pullback, you see. It's just a very a normal sizable pullback, and we haven't even had that since June of last year, you see. This is just a testament of how strong the stock market has been. It has been extremely strong. We're taking advantage of it. We're looking for opportunities within S&P 500. Now, you cannot always buy this, the actual ETF of S&P 500, because there was just no opportunity. I wouldn't be buying it up here. I would only buy it if it comes down towards the blue line, like we had here, for example, in June of last year. But within S&P 500, there are plenty of opportunities. There are multiple stocks each day that are doing something similar to this, breaking out above the blue line. So we do that pretty much every day. We look for opportunities. Here's Dow Jones. Not much different from S&P. Same thing. We broke out back in May of last year, and pretty much we never looked back. Right this instant, again, we did touch the green line. We closed below it, but we're rallying again. So overall, the stock market is bullish. Stock market will remain bullish until we close below the yellow line, which is, you can see, a huge distance away still. Looking at NASDAQ QQQ, also we did touch the green support resistance line, looking right there on the 20th of September, but so far we kind of touched it and rallied. So this is again a classic hammer candlestick on the 20th of September, where the bears were stopped by the bulls. The bulls came in and said, no, not so fast, we're going to be buying here, and they started buying. It sure feels like we're about to make a new record. We're so close. We're really approaching new records again. Notice that NASDAQ is even stronger. The breakout occurred slightly earlier in April of last year, and the latest opportunity to buy was in April of last year. Notice again, we did not really have a good opportunity. We did not touch this blue support resistance line since then. And that means there was no good opportunity to get in on this particular security, QQQ. But again, within QQQ, there is a bunch of stocks that we daily get alerts about, and we can trade those. Small caps, so small caps slightly underperforming the large caps counterparts. Small caps had an opportunity. We had an opportunity to get in here in September of last year, where I'm hovering, 24th of September. And again, since then, that was not really a good way to get in. We're really close to records. Records are just a few percent points away at 234 here. It's really possible that we will make a new record. Alternative scenario again is possible. We'll get a pullback. Project my lines into the future. You can kind of see actually that the lines are narrowing, so the trading range is narrowing. Usually this to me means not a great sign, because it will take less effort for the price to move towards bearish levels, and you can see the bearish levels here projected in early December to come closer towards the current price action. So current price action is around 222, but projected bearish levels right there where I'm hovering is 12% away, while the current bearish levels are 27% away. So this is called a narrowing of a trading range. You can kind of see it. You see right there. So we'll see what happens. Ideally, if we make a new record, this will be negated. So ideally, I'm looking to see a new record, but there's no way to project, so we'll just have to deal with it. All right. So a lot has been said about this new problem du jour, the EverGrande collapse and the imminent collapse, possibly, of this Chinese company. So I'm reading Wall Street Journal, and here's the headline: EverGrande auditor gave clean bill of health. So it's this spring, so in, I guess, March, April 2021. Okay, so let's look at what happened in March, April of 2021. So the way I trade stocks is I look for a stock that has been below the blue line, and in this case this is EverGrande. Back in June of 2020, you can clearly see this breakout. So I would have bought it right there on the 9th of June, and I would have made some money because I would probably have exited at least partially right there on the 8th of July. And surely I would have exited this particular position from the 9th of June. I would have exited right there on 24th of July 2020. It is possible that I would have re-entered, maybe like there. So in that case, if I did re-enter, and my target would not have been reached right there on 14th of August, and I would have been sitting in the position. I would have been sitting in the position until this date. So let me show you where I would have exited. And I would have exited right there on the 1st of April 2021. So again, I don't really know anything about anything. Like, I don't watch these auditors, I don't read the reports. I surely never even heard of EverGrande until like a few weeks ago. And so if I was in Hong Kong trading this thing, and let's say I actually bought it using my system right there on the 3rd of August, I would have exited right there on the 1st of April with a loss. Okay, this loss would have accounted for 33% of my investment. So I would have bought at 21, I would have exited at around 14. It is not an insignificant loss. Okay, but as I keep saying, we need to honor our stop, because quite often if we don't honor our stop, this is what happens. So let's say I didn't exit, from back here, from this position where I would have entered in August, the 3rd of August 2020. If I didn't exit there, and for some reason I would be still sitting in the position right this instant, I would be down almost 90%. So it's basically almost a total waste, total loss. So if I was to enter at $21, currently it would have been at $2. So you can see that we're almost at zero. That's not good, right? We're almost at 100% loss. Will EverGrande rally? Don't know, don't really care. But what I'm trying to tell you is that we need to exit when our stop is hit. And if we were trading it back then, our stop would have been right there on the 1st of April. Okay, so with or without this auditor clean bill of health, or dirty bill of health, we would have been out of this trade, you see. Now people are finding out that, oh my god, we don't even know if they are going to be paying anything, you see. So now people are finding out that they're just going to have a huge loss on their hands. Okay, so how to put this in perspective? You can trade any stock using my lines. You can trade any stock. The trick is to actually follow the system. So if the stop is hit, you need to exit, and if you don't exit, that's a psychology problem, and you can end up being a huge loser. All right, so honor your stop. That's basically what I'm trying to tell you. All right, moving on to bonds. Here's Treasuries TLT. So Treasury bond funds, TLT, long dated treasuries. Currently they're in a downtrend. You can see the previous signals right there, latest one being on the 27th of January, very successful signal. Latest signal was right there on the 9th of July. And so far, it really hasn't resolved one way or another, because our stop is on close above the blue line. But notice what was happening over the past few days. We're seeing strong push lower, and we're again approaching this red line, red support resistance line, currently at 145. So if that is hit, I would short it. I would buy puts on TLT, because I think we will continue lower. we will most likely take out this 17th of March lows. So by extension, we can look at TYX, a 30-year Treasury bond yield. So if we're gonna look at the 18th of March lows for TYX, this is the actual yield. So 18th of March high are of 2.5% basically. So looks like we're, for the 30-year Treasury bond yield, looks like we're headed significantly above 2.5. Okay. For the 10-year Treasury yield TNX, it's already breaking out. So I am fairly certain we will go above 1.8. Okay, so this again will weigh on mortgages. So mortgages will become less affordable. By extension, this actually will help the stock, will help the real estate market, because it will cool it down. Not as many people will be able to afford a house, you see. So not as many people will try to bid the prices higher. So perversely, this is good news for the real estate market. If you have cash, you can just buy it outright, because you will have less competition from people who are trying to get financing, you see. But you know, for us it really makes very little difference. We're just looking to trade it, right? So to trade TLT, we're looking to sell it short. We're looking to buy puts on close below 145, okay, where I'm hovering. And moving along, here is dollar, Forex Universe, DXY. So again, I keep reiterating that dollar demise of the dollar is greatly exaggerated. You know, demise of United States is greatly exaggerated. All of those news of gloom, doom, and the end of United States, and by extension the reserve currency of the US dollar, it's just not true. You see, we need to look at the chart objectively, and what I'm seeing here is the opposite. I'm seeing resurgence. I'm seeing resurgence of the dollar. So this is DXY, currency index, versus other currencies. So this index of how is United States dollar performing versus euro, Japanese yen, Swedish krona, the Canadian dollar, etc. So you know, a basket of currencies. And what I'm seeing right now is the opposite. It's performing better. It's rising in price. So people who keep saying that we're gonna have inflation, will, once I get to gold, I will try to show you that again the fears of inflation are greatly exaggerated. So looking at the dollar, we're seeing actually a breakout higher into the bull market. We have entered the bull market right there on the July 13th of this year, where I'm hovering. The low point was on the January 6th during the insurrection. The beginning of a bear market was here on the 2nd of June 2020, you see. But now we are seeing the opposite, you see. So we're seeing dollar actually is appreciating in price. I went ahead and I bought calls on UUP. So if you trade currencies, you say UUP is United States dollar bullish fund, and I bought calls on them. So in other words, I am thinking that dollar will continue higher from here. And looking at gold, I don't think I'm wrong. I think gold is in a downtrend, even though it just didn't really do much in the past, you know, since March of this year. But you can see that this is, in my opinion, the beginning of a bear market on March 8th right there. We had a large protracted rally into June, but then we were starting to get again, you see, there is the opportunity to sell it short right there, 16th of June, an excellent opportunity right there, 16th of July, which really finally resolved in our favor. And now we're seeing again great opportunities to sell it short. The latest excellent signal was right there, 16th of September, And if you were able to get in on 22nd of September, I would be sitting in this short position. I am fairly certain we're going to retest the August lows, and I don't think we will hold them. So looks like if we break below August 9th lows, we're going to be in multi-year low territory. You see? So that would, the lows would go back to 2020. That's going to be multi-year lows. So the reason being is once again because dollar is appreciating, XAU divided by USD, the lower part of this equation, US dollar is getting stronger, so it is pulling this currency pair lower. And this currency pair happened to be gold divided by US dollars, gold expressed in US dollars. Here's gold miners, GDX. This one is clearly leading this market, the gold market lower. By the way, opportunity and this actual alert right there where I'm hovering on the 17th of June. Another decent opportunity, but you had to be really nimble right there on the 4th of August to get in on the short side. So we're at 2+ year lows for the gold miners. This is, in my opinion, again, is showing that it's leading the gold market lower. So I think gold itself will not hold this low. So 9th of August lows most likely will be broken. So yeah, let's watch for the new lows for the gold complex. Now, of course, it's not going to be a straight line. We might get a pullback, but overall the direction is down. And finally, here's Bitcoin. More news on that front. So notice that we had what I thought was a signal, and actually there was a signal here on 13th of July. Unfortunately, it didn't really go anywhere, and we got a rally. And so now we had a signal to the upside. Okay, so the signal to the upside was on the 20th of August. But now we're actually seeing the signal to the downside again. Okay, so I think this time would be the charm. So looks like we're breaking down significantly. This is a breakdown. This is a bearish signal, 21st of September. I think we can easily collapse for Bitcoin towards the July lows, but probably even lower. I mean, the July lows are 30% away, but I think we'll collapse lower than that. So China just completely outlawed basically all the cryptos. I mean, again, I don't really care much for fundamental picture, but technical picture is looking bad again. Once again, I thought here we're seeing a breakout in August of this year, 2021, but no, looks like we're not. Looks like we're about to collapse here. Alright, that's it for this week's recap. Head over to MasterChartsTrading.com, click on products, and I have 3 packages for you. One is the trading indicators, so it's these lines, the green, blue, red, and yellow lines. Again, with these 4 lines, you can pretty much trade anything you want on most time frames. I can explain it. There are many videos how to do it. If you need my newsletters, so I have 2 newsletters, the Elite and the Speculator. Again, you can find out more about them, and there's lots of samples every day. New opportunities come up. We buy and we trade various securities and ETFs, large cap, small cap stocks, and all kinds of other securities like commodities. And Ultimate Bundle includes all of the things that I just mentioned, but additionally it has a stock screener, which you can also get various alerts and various lists of the stock market So you can see there's many different lists that you can have alerts on. So head over to MasterChartsTrading.com, sign up. If you have any questions, please let me know. Other than that, don't forget to hit the like button. Thanks for watching and have another great trading week. Bye bye.